So what's your plan to keep your investment profits safe if next week, Wednesday, even Thursday or Friday, the government is still shut down, GDP starts to crumble, and the stock market starts to fall? You better have a plan now. The time to make a plan is not when it's happening, the time is now. I know what I'm going to do. What are you going to do? Want to know what I'm going to do? Click the little red email icon in my bio. The immediate term bullish case is a couple of those negative divergences which just popped up 2 weeks ago have now negated themselves. This is bullish. I really like that as of 3 o'clock this afternoon, the S&P 500 made a brand new all-time high, and the S&P 500 advanced decline line has made an all-time high again. This is wonderful. In other words, meaning the number of companies in the S&P 500 higher versus lower on the day over some time. This is bullish. It's also bullish that over the last couple days, not only the number of companies finishing higher, net higher on the day, but how much higher, otherwise known as the McClellan Summation Index, they're generally turning up on all of the major averages. Even the Russell 2000 down there in the lower right seems to be finally flattening out. This is also bullish. The S&P 500 SPX as of 2:30 this afternoon, still in that confirmed breakout above 6,636. It won't go up every day or every week, but as of now, the sky's the limit for the market. The NASDAQ 100, and even more specifically, the Mag 7, was underperforming today, led by Tesla, Nvidia, and Meta. Gold prices are now only about 3% away from the next all-time high, historic $4,000 an ounce level. I hope you are in this trade with me. Gold prices have made their 8th consecutive quarterly gain. This is the 3rd longest streak on record. This trails only the 9-quarter run in 2019 to 2020 and the record 12-quarter run higher, that streak from 2009 to 2011, according to Bespoke Investment Group, and is posted by the Kabasi letter. As of 2:22 this afternoon, gold making an unconfirmed breakout. Yup, another one above that level I think is important, $3,892 an ounce. Watch this level. I think it even goes higher. I am so happy I hedged my long natural gas position yesterday because it was down today. Now I get it. We are still in that confirmed breakout, and natural gas can technically chop in that range between $3.39 a cubic foot and $3.09 a cubic foot. The next bearish move for natural gas, which I would actually kind of love and welcome, would be a breakdown below $3.09 a cubic foot. Continue to watch these levels, but I don't care what happens. My account is hedged. We still have the unconfirmed breakdown in crude oil here below $61.53 a barrel. In my opinion, as of 2:19 this afternoon, personally, I am not going to take a long crude oil position. I am going to play this ultra safe here. The possibility exists for the Dems to keep the government shut down. I think that could be bearish for oil. So yeah, maybe a more greedy investor could take a long oil position here. I'm going to stay away from it personally. This is not investment advice, and if you don't know me, I'm John Crocker, professional investor, proud American, cigar lover, and owner of Crocker Capital, LLC.